Okay, welcome back to another video. Just wanted to do a recap of some of the moves we saw on the SPY today and QQQ. If you don't know who I am, first things first, my name is Aiden Hamlin. I have over 7 years of experience investing in stocks and cryptocurrency, as well as bonds, and my goal is to teach the middle class how to get richer. If you haven't already done so, hit the like and notification bell so that you can keep getting tips and tricks as well as knowledge on the stock market and cryptocurrency. Now, if you're new, how do stocks work exactly? How do they make you money? A stock is simply a share of a company that makes you a partial owner. So if you are a partial owner, that means you have equity. A stock is simply a share of a company that, let's say for $10, you buy ABC stock and it goes up 10%. Now you have two options as the owner. Your share that used to be $10 is now worth $11. You can sell that share for $11 and make a $1 profit. Or you can hold it for a longer amount of time, hoping that it might go up to $20, $30, $40, and eventually sell that asset when you feel like you got it at the best possible sale price, or you're just done with it, or you're just ready to cash out. That's all that a stock is. And a lot of people don't know exactly what is the best first company to buy, especially with stocks. I always tell people if you have $100, take 40 of those dollars, put it into VOO, which is the S&P 500. You also have QQQ, putting $30 into there, putting $20 into CLOI, which is a short-term bond, gives you like a 6% dividend each year, and then having $20 set to the side for cash. It's a good starter portfolio, and then when you have a dip in the market, you could actually use that cash on the side to buy more aggressively so that you could get those shares for a better price. Kind of like a negotiation. If you have the opportunity to buy Ferrari at $1 million versus $500,000, you're probably going to choose the time where you can buy it for $500,000. So you're going to buy more aggressively when you're in that circumstance. Now, let's go over, oh my gosh, it's a lot. So what is going on with Trump and the tariffs? So a couple of things to look out for, keep an eye on. President Trump just announced an additional 100% tariff on Chinese goods. That is a total of 130% tariff with a prior 30% tariff that was already on there. And this is going to be effective November 1st, ladies and gentlemen. Now, therefore, that would be quadrupling the fees companies need to pay to import goods from China. Now, companies like Nike and Apple have seen some hits, and you'll see them drawing down on the Tuesday morning candle. And I do plan to buy Apple, but once there's more clarity on this deal with Trump and China, that's when I'm actually going to be going into a leverage buy. Instead of buying AAPL, which is the ticker symbol for Apple, the company, I'm going to be buying AAPB. That is a leveraged ETF. That means that every time Apple goes up 1%, AAPB goes up 2%. This is not a suggestion for you to do. I'm just telling you what I would do or what I am doing. Anything I say is not a suggestion for you to buy, hold, or sell any stock. I'm just planning on doing this because I've done it before. It's made me a lot of money. Apple is a very strong company. They make a lot of money as well. So it makes sense. They're at a fair price. Now, post announcing these tariffs, let's just look back on what happened on Friday. So tariffs raise the import cost by 4%. So this is fueling inflation and uncertainty. And this also triggered $2 trillion of stock to sell off on October 11th. Now, there is recession fears, but on the Monday morning, you did see that there was a rebound or a correction to that because over the weekend, Trump was like, well, no, we're all good. Like, nothing's bad. Me and Xi Jinping, we're boys. We're figuring it out. So the market, especially since it is super inflated, it is at the mercy of the tweet, for lack of better term. So you have to be aware of what the president is talking about, what the White House is talking about, and what his admins are talking about as well. If you notice, you would have been able to get a pretty good pick on Lockheed Martin, given the fact about everything that was going on with Iran just about 6 weeks ago. Now, flash forward, we're already 10% up from 2 weeks ago with Lockheed Martin. These are just little examples that you need to start looking for as an investor and saying, okay, well, what is happening in the real world and who is making money from that? Politicians, at the end of the day, they're going to help their people make money. So what is the president doing? What is the White House doing? How are they doing, or why are they doing that? And who is making money from this? And how can I get a piece? Moving into Fed Powell also just announced that there is a weak job reports, but in shocking news, he was actually kind of dovish towards the end of what he was talking about as far as how September job reports went. So he did express that he is going to be heavily considering. This is the thing with the Fed and the White House, though. When they say heavily considering, or we might be going to, or we might have to, this is jabbering. It's jawboning. This is them just saying things so that they can move the market. Now, regardless, though, we do expect to see interest rate cuts. So what you're going to notice is a lot of people are going to be taking their money out of the bank. They're going to be taking their money out of short-term bonds because the yield on those is going to decrease. So they're going to maybe liquidate some of those bonds or some of that cash and put it into the stock market. So you might see a short-term boost in the stock market because of what Fed Powell is talking about with boosting or cutting, interest rates. Now, needless to say, people are scared. They think we're about to have a major pullback, which it's justifiably so. You have AI taking over a majority of the reason why the S&P 500's PE ratio and QQQ's PE ratio are moving as fast as they are. You also have the considerations that on a long-term time frame in this trend, right now, the S&P 500 is insanely overpriced. So if you were to go back to 1993, 2000, and 2008, there were all times where the S&P 500 was in a major chart, sort of like the line that you typically see on. I wish I was better with tech. I'd be able to show you. But essentially all it means is that it was at its highest of all highs. So what goes up must eventually come down. We do expect to see a correction, but I'm not going to say that I'm bearish just yet. I don't think that it's right for me to say that I'm bearish just yet because there's just too much going on. Seasonality wise, if you look at seasonality, November is one of the strongest months for the S&P 500 and QQQ. I think it is very possible that we see anywhere from a 5 to 15% increase from where we currently are into December, and then maybe a major pullback in January. You never know, maybe something with Israel or Iran or something happens where, yes, there will be a major pullback, but I don't think that that's happening just yet. So I am personally still going to be buying. I am buying. My portfolio, as far as VOO, QQQ, it's in the green, but definitely way lower than where I would like it to be. So I definitely did see a lot of my money get depleted from my portfolio. But this is where you cannot panic. This is where you have to say, okay, I'm going to reassert myself. I'm going to double down and put more money into the stock market because I actually had money saved up in cash on the side because I knew that there was going to be something like this happening where you have a mass liquidation, a mass exodus of people who are scared. Now, this is why I always tell people. I was having a conversation with one of my coworkers. They said, Aiden, I'm about to get $30,000 for my IRA. I don't know if I should put the whole thing in at one time or if I should just put it in little by little. If we were already 15% down in the S&P 500, meaning if we were already in the 10 to 15% drawdown, if we were back in April 3rd, I would have told my coworker, hey, put all your money in, or at least half of it in, because this is a major drawdown. It's a huge discount. It's a huge sale. Similar with Aston Martins, Lamborghinis, Coach bags. If it's 15% off, 20% off, I'm going to buy. But when you're in a market where it's super inflated, all-time highs keep getting beaten, you know, yesterday was the all-time high, now today is the all-time high, tomorrow's the all-time high. You have to be able to be wise with your money and understand that chasing the trend up is never going to make you rich. It's chasing the trend down and buying when everybody else is selling, and then holding those positions long term when then everybody else's confidence starts to increase. That is where the rich get richer. Now, here's the thing. Winners are going to be typically VOO, QQQ, and IWM, so it's crucial that you pay attention to how they're moving. It's crucial that you pay attention to the news, figure out what's going on with China and with Trump. I personally am going to be opening straddle positions on zero data entry XSP options. This is risky, but it does make sense because I've already accumulated a portfolio that's large enough where I can assume that risk and treat it like an insurance cost instead of a gamble. So if somebody has $200 and they spend 160 of it on an option to straddle, it's not necessarily the best play for them. However, if you have 10,000, 20,000, 30,000 inside of a portfolio, opening something like a straddle position in a portfolio where you already have long-term profits that have been built up and you want to protect them, capitalizing on volatile moments like we saw on Friday and like we saw today on Tuesday could be beneficial to you as an investor to treat these XSP, these mini options, as a insurance expense instead of what other people treat them as, which is gambling. So if anybody ever tells you that options are a bad strategy or it's gambling, options are not. Options could be gambling, but the correct way to use an option is to essentially buy insurance against a position that you're already in. If you treat options like such, it's very hard to fail as long as you have a good plan set up with that. Now, the last thing that I really wanted to say is that, ladies and gentlemen, they are not teaching you people this in school. They are not teaching us this in school. I don't care if you're black, brown, white, yellow, green, purple, orange. Educate yourself on the stock market. It is very hard to be a middle-class American and grow your money in an asset that assumes little to no risk over the course of 10 to 15 years, as well as at a cost basis, you could put in as little as $1 a day. You could put as little as $1 a day into the S&P 500 and quadruple the amount that you would typically make in a high yield savings account. Why are you not doing that? Take advantage, stay blessed, stay aware, and hopefully this video is able to upload tonight because I would love for you guys to be able to take some of this information and walk with it into Wednesday morning. Other things that I am going to be mentioning right now, these are my top 5 picks for the month of October. These are my buys that I'm holding until the end of November. It is Microsoft, Tesla, Lilly, so MSFT, LLY, UNH. I also have, I already said that one. NVDA, as well as LMT, Lockheed Martin. Those are positions that I am going to be buying in. I'm at $9 a day with most of them. Microsoft, I'm at $23 a day. However, if you do want to take advantage and maybe expose yourself to more risk besides the S&P 500, investing into those companies from now until the beginning of November and holding them long term is something that I am going to be doing. But anything I say is not a suggestion for you to buy, hold, or sell any stock.